East African community member countries have in the last few years been gearing up to have a common market protocol in a bid to raise the standards of investments. According to the Capital Markets Authority Acting CEO Paul Mudaura, the realization of this is on course, which will in the end enable investors have a single controlling market protocol in the raising of capital in any country within East Africa, with the benefit of a huge common market base.
You don't need to go and find an intermediary, a broker in that other jurisdiction. You don't need to deal with capital controls and moving, for example, securities across a border before you can access that exchange.
Mudaura notes that the fact that the legal framework is not a single overarching law means that it cannot be held back with the delays of one country, as has been the case in the implementation of the single tourist visa.
We are not going to be held by a process of one country maybe moving slower than another in the negotiation of a single law. Once you're able to agree on standards, it's much easier for everyone to agree on if we're trying to achieve best practice standard.
Today's stakeholders meeting with other East African community member countries marks the second phase of the 3 phases in the integration of East Africa's capital markets, with the final phase expected to facilitate the harmonization of trade laws, macroeconomic, investment, and tax policies to enhance trade.
We're creating a single destination for capital within the EAC, so that if you have an investment that you want to make, for example, in Tanzania, you have no problem accessing it through the Kenyan markets. You can raise the capital in whichever market you feel has the greatest depth.
Nicholas Ndwati, News Hour Business.